Hey everybody, Trendy John here from Simpler Trading. Let's get started with this week's broad market analysis. We'll be covering the February of 2nd. Can you believe it? We're in February, moving all the way through the 7th of February, which is Friday. It's going to be a jam-packed week. We got news out there about tariffs. The one thing that I would recommend to you right away, if you have social media, especially X, if you're using Twitter, which I love, I would go ahead and take just a few minutes and go ahead and block the word tariff. I mean, it is going to cause some chaos in the market. The overall sentiment is we're going to dump. And if that truly happens, I'm going to be here to let you know what level should work going into this week. Okay. So please take a moment. Go ahead and like this video, share it with anybody that you feel like could be using or could use this video to help them. I really, really appreciate you. Let's go ahead and get started with this week's major U.S. economic reports and Fed speakers. Monday, February the 3rd, we're going to start it off with PMI. And then coming on down here around noon, we have Atlanta Fed President Raphael Bostic. And then Tuesday, we have job openings, Atlanta Fed President Raphael, San Francisco Fed President Daly, and Federal Reserve Vice Chairman Phillip. Again, guys, I am a professional supply and demand trader. My job is to identify the bigger levels with you and to help you understand that all of this stuff is just a catalyst that pushes price to the levels that I'm showing you, which are supply and demand, right? So if we want to think like bigger money, you can't think like retail. All right. So listen, the buzzword is tariff this week. It is going to scare some traders. We're going to get sell offs. We're going to get chaotic moves. I keep hearing the same thing. Hey, John, now that President Trump is in office, how do we trade this market? Nothing changes, folks. If you will, I just want to take a few minutes with you. I always tell everybody, and really, here's a good one to use, the fear and greed. Let's just pretend that this level right here, this is your RPMs or your miles per hour in your car. Now, when markets are pretty dull and it's kind of sleepy out there, we tend to run anywhere from like 0 to, I would say, 50 miles an hour. Okay, that's like normal. That's where people are comfortable, especially retail traders. And then when Trump gets into office, we knew this, right? We traded back when he was the president before. He creates a volatile market. So what happens is the car that we are now behind the wheel and we are driving likes to drive somewhere above 50 miles an hour all the way to 100. All it means is that the speed in which price moves from the supply and demand zone. So let's say that we have a supply zone here and we have a demand zone down here. Your normal market looks something like this. It starts to break down. You might get a little move. We're running at about, I don't know, 30, maybe 20 miles an hour to 50 miles an hour. And we get there and you got time to think and all these fun things. Well, guess what? That's not happening anymore. This is Trump's market, right? Boom, pushes into supply. You are in euphoria. That would be Friday morning. It's been an amazing week. We're making tons of money. And then, boom, the word tariff comes out, and we find ourselves right down into a demand zone. So, from 20 miles an hour to 80 to 100 miles an hour, welcome to 2025. You better get used to it. You better understand where the levels are. I am going to help you prep for that, okay? All right, so back to it on Wednesday. On the 5th, we have ADP employment. Again, Goolsby, Michelle Bowman. Listen, there's a lot of Fed heads in here. Thursday, some initial jobless claims. Friday, more Fed head speaking. This tells me right away we got a lot of noise coming into the market this week. And, with all the stuff that's going on over the weekend with the tariff talk, it's just going to be crazy and chaotic. One thing that I'm really looking forward to, though, are this calendar for earnings. Absolutely wonderful. I know there's a lot of folks out there on Palantir, PLTR. Last year, I was telling you that my price target for this was 100, and this is when it was trading at like $14, $15. And guess what? We're like almost there. So I'm sure there's a lot of like eager and very enthusiastic traders out there looking for the results from here. So good luck to all those shareholders and anybody that loves PLTR. Moving on over here on Tuesday, we have PayPal, Spotify. This is one of my favorite names. Pfizer. I have a position in Pfizer for Leaps. And one of my big things here, and this is for the room, if for some reason they report stock goes down, doesn't do well, I'll be rolling mine out into 2026, perhaps even 2027. We'll see. All right, just kind of depends on what I feel like spending and how much time I plan to be in the name itself. Okay. AMD, I also have a position in this. I did a little bit different this year. I have a 120 by 170, and then like 210 or something like that on the other end. Butterfly, that is a leap. So I'll be watching them, and if anything, I may get the opportunity to add into it. Here's one of those things. If the market does dump down, all right, then I probably get a lot of opportunity in a lot of these names to add that I have leap positions in. The next big name, Google. I think it's all-time highs this past week. Snap, Chipotle, Regeneron, Pepsi, Ferrari. I'm interested in Estee Lauder. This is a big company. With social media out there, I feel like a lot of their products are being sold and so forth. So I'm definitely interested in that chart and perhaps may even take a trade into earnings, which I love to do. I teach traders how to trade debit spreads into earnings using supply and demand zones. Then next, Uber, Ford, Disney, Qualcomm, ARM. I mean, it just keeps getting better and better. Viking. Moving on down, let's see anything else. Nope. Let's get into Thursday. LLY, Amazon, RBLX, which has absolutely been on fire. Amazon's been on fire as well. Elf, Cloudflare, Affirm. Let's see, Pinterest. I love that name as well. I mean, I don't trade it a lot, but I had a really good trade on it last year, so I just say I love it. And then on Friday, this is kind of funny to me. CGC. I remember. Anybody else remember when that was actually popular and fun? Old school marijuana stock. I'm not. I haven't looked at that chart in years. It feels like so. Anyways, these are just catalysts. Price is going to push to supply and demand. And again, I teach you how to trade earnings, being confident and consistent into those, and understanding your risk. A trade is just a trade. So don't be afraid to take trades just because we're having binary events and stuff like that. Okay. All right. Next thing that we are going to be taking a look at, let's go ahead and get into the bigger picture. And this is so important to me because, like, again, I keep bringing this up because this is the sentiment, but everybody feels as if the market's going to dump really hard when we open up tonight. And, you can't be looking at 5-minute charts, guys. You got to be looking at the bigger picture. I like to use a quarterly chart to keep on the right side of my portfolio for the long term. So, when things start breaking on this chart, that's where I go more into a defense mode and start to really take some cash off and say, okay, maybe, we shouldn't hold these for much longer. But this is a quarterly chart, so each candle represents one quarter. As far as my notes are concerned, let's just go ahead and read those really quick. A great week that ended on a bearish daily candle that closed at the daily 9 EMA, but still above the weekly 9 EMA. That's actually still super bullish. A lot of speculation that the recent tariff catalyst will cause a big dump. Any dump that stays above 586 is still buyable, in my opinion. If for some reason we get a bigger drop than that, look for 580 to 570. And of course, down here, guys, this is the bullish channel of this really big run, and that is 562 by 533. Now, one thing that I have said over and over on this particular chart is the divergence between price and the 9 EMA on the quarterly chart, guys. So again, it's been above this cloud, if you will, for many, many, many years. The last time that we got above it is right here, right before 2011. We have stayed above it, and any time that we've come down into the cloud, although very scary, it has been an opportunity to buy the dip. And for me personally, I started out with my January 2025 projection with saying this. I'm very bullish in the market, but I'm more bullish on buying the dip. So January was really fun, but I feel like it could be really fun for the rest of the year if we were to get a sizable pullback that really scares a lot of traders, but we take advantage of the levels that we're using. Okay, so I got to bring this up just in case we get some really big move to the downside over the next several weeks or months or something like that. Okay, so let me point that out once again, that 9 EMA, and right now that 9 EMA is confluent with price around 525. Okay, so around 525. You guys can see we're trading at 601. That's $75 to the downside. I've seen crazier. All right, and there's a demand zone that's all the way down here at 465. In my opinion, these would be my favorite places to get long. I just don't know if you actually get a pullback that big. Okay. All right. So moving on down, the next thing is let's look at SPY with fibs. Okay. So I just showed you a quarterly. All right, I gave you some levels, but now I want to concentrate on this chart right here. I know it looks like there's a lot going on. Let me just please explain to you really quick. I pick an area for my primary Fibonacci's, right? And we go ahead and anchor those coefficients on this range that's moving like this. And then I went ahead and put a secondary from this range to here. And what I found is that the most recent, nice little rally that we had right in here, the 618, which is the golden fib, is confluent with the overall 23.6 of a much bigger range. So therefore, this is going to be my two major levels, and that's what I was talking about over there in the notes. So right around this 587 and a half, 586, this is my major level. And then to the upside, if we can get up and over 602, so say we dip into tonight or tomorrow, but buyers do show up. The question will be, can you get back above 602? All right. So 602, and again, down here towards that 596, 597 level. All right. Let's go ahead and reduce and put that down there. And we're going to pull back up the trading view. And now we're going to come over to the Qs. Let's go over to the QQQ. Same thing. Beautiful chart. Above the 9 EMA on the quarterly for a very long time. Let's talk about the notes. The past week started as a great by the dip and it ended Friday back underneath the 618 and price closed at the daily 9 EMA. Price is still above the weekly 9 EMA, just like SPY. All right. So still bullish. In a lot of technical ways, just because of the tariff talk, this could just be an opportunity again to buy the dip. All right. But, there's a lot of speculation the market will dump. The two major levels for me going into this week are going to be 522 and a half and 511. That'll then bring me over here to the Qs to show you the Fibonacci using a daily. Things look a little bit different. Here's the reason why I have the major levels. We have a golden fib, but right here there's a blue dark line. That's your yearly edge. Very, very important. We've been talking about it the entire year. If we can get back over that, that sounds good. If we dip down, I really like this 511 to 503 area. But if that does not hold up, guys, expect prices to hit 494 and possibly even all the way back down to the 200 SMA, which puts us around 480. Now, over here in November for the election, we had this imbalance calls in the market. If you guys recall, this is very, very, very important. If you guys recall, I've been telling you that the SPY came back and filled the imbalance, and we had a really nice trade out of there. But what I've been noticing this entire time is that the Qs have not come back to there. Okay. If you look here very closely, they actually didn't fill that gap. They got close, but they never did. So if for some reason the market dumps and comes back to here, I'm buying. All right. 200 SMA, imbalance in the market. It definitely looks like a great area, at least for me to try my hand there. Please, as a disclaimer, that doesn't mean I'm full porting, putting my entire allocation into this idea or trade. Just means I'm going to try and buy there. All right. All right. So the next thing this brings us to is going to be the dollar. And we're going to pull up Trading View one more time. And in order to see the dollar, let's go ahead and type in DXY. All right, so here's the dollar. Instead of a quarterly, we're going to go to a weekly. Let's just talk it through really quick. It's been helping us for a very long period of time. You guys all know that. Price came down to demand. It pushed up. It came back to demand. Every time it comes back to demand, we start to, kind of throw that yellow flag out there and say, look, guys, if the dollar's pushing to the upside, and if we're in supply zones in the QQQ and the SPY, we're looking for the market to actually start to pull back. There is correlation there, just like you could see here. I told you to look for the rejection last week, and I said because I was looking for the rejection to look for the markets to move up, we took advantage of that. We bought the dip. We made money. Actually, it was one of my best weeks, also my best month. So very, very happy about that. But here, notice that we came back into Friday off of the demand zone. The dollar then pushed to the upside, and guess what? The market went down. So you could say by using supply and demand and the dollar and the TNX and everything I show you, there's absolutely correlation to the overall market. And that's why this broad market analysis is so damn important every single week. Let's go ahead and move on now. Well, before we do that, going into this week, you could see that it's being supported by the cloud and the demand zone. If we spike, my levels that I'm looking for are going to be 106 to 111 and a half. If we get over a 111 and a half, then things are looking really ugly. But I would expect a rejection around a 111 and a half. So that means if I'm expecting a rejection, I'm looking for some sort of relief bounce into or overall in the market. Please, please understand that. Remember those levels. Let's go ahead and move on. We're going to go into the 10-year Treasury. And this is going to be the TNX. That's what we're going to type in there. We're looking at the weekly. And far as this is concerned, I just want, to see the TNX kind of chill out. But it did find a little bit of love here at the cloud. We're going to treat this just like we do any other stock. If it's above this cloud and it's bouncing, guess what? A little bit of a yellow flag. Dollar, yellow flag. TNX, yellow flag. Friday, we came into supply zones, red flag. It all comes together. We get the pullback that we had on Friday. Okay. Moving on down, the skew, very, very important. What's been going on in the skew? Well, last week it was so damn high that, I said red flag. All right. Now, what's really interesting is that we indeed, were careful, extreme. You want to buy puts 30 to 90 days out. It's not a matter of if, it's when. So if you go back and you look at the SPY and the Qs and you put that behind the chart, anytime that we have these high readings, we do get a pullback. It's just timing is the variable. Okay. And over the last year and a half, the pullbacks have been really small for the most part, but they've also, when they do happen, they feel a little extreme. So it's like you have 100 tiny blips where we pull back into these small demand zones. They work. Everybody gets, they're in this mode of buy the dip, buy the dip, buy the dip. But the times that the market has pulled back, they're pretty extreme because to me, there's not like this slow build up to it. It's just like bam, right? And what we want to see over here on the skew is you want to see this start to come down. Okay, you want to see it start to come down. So right in here, if we get down into this area, I want to be looking at buying calls 5 to 10 days out. And believe me, it's still going to be scary in the market if we see something like this. It's not going to feel right to you. It's going to be right at the cusp where you're like, we're going to get a crash in the market. And one thing that I want to bring up as well, and I haven't seen this, it feels like in almost 2 years, it's about been a year and a half or so, right here. Yeah, actually, it's been 2 years since we've come back, and these were normal levels, guys, in the skew for many, many years. And this was the information that I was always providing on the broad market analysis, but we haven't seen it in 2 years. And I keep saying, if we see this, then you finally, if you have not traded ever in the last 2 years, you're actually going to see what extreme fear feels like. And this is where I like to buy calls at least 30 to 90 days out. And again, I want you to be aware of this because if it happens, most likely you feel like the world's coming to an end. I promise you that. Okay. All right. So, plan of attack, just using this right here on the skew. And again, guys, it's very important you understand that I'm also looking at the ES, the NASDAQ, I'm monitoring all these things. Is that if we were to get into here, I'm looking for a short relief bounce. If you want to know what a relief bounce is, check it out on my YouTube. But this is where I'd buy calls 5 to 10 days out for that relief bounce. And if for some reason we dump all the way down here, then I'm buying calls a lot further out. Okay. But I'm also taking some of my hedges off. All right. So I do have some hedges in my portfolio. I like to sit here and say that I have a bunch just because of the way it's sounding over the weekend. But, I have a handful of SPY puts that are out the money that expire in March. I have some NVIDIA puts because I'd love to see it at 100. I have Google puts because I just feel like there's a nice imbalance down below where it should be going. And then I bought puts for Apple in March because there's also an imbalance there. Overall, though, I am net long in the portfolio, and my plan is during big dips is to add to my leap type trades. Okay, let's go ahead and move on. We're going to get into the fear and greed index, which I showed you just a little bit earlier. We're sitting at neutral. Last time I showed you, I think it was a little bit more in the middle. It's starting to creep down towards the fear side. Market started to look scary on Friday. It makes sense to me. Remember, guys, a lot of room to move here to create a lot of panic in the market. But also, we are just kind of hanging out here in the neutral. Future is a very important part of my overall analysis that I share with you guys every week. I'm going to go over the ES charts, the NASDAQ charts, and then we are going to finish it off with Bitcoin and the VIX. Okay, so please bear with us, stay with us, and just because you do not trade future, do not end the video here. You can trade the SPY and the SPX off of this one blueprint that I share with you all. All right, let's go into the weekly. And again, I always like the top down approach. This is your weekly chart. Some things to talk about that I believe are important are the levels, obviously. So we're going to come over here. Let's get into ESH25 is what I'm using. Let's go over what's happened so far. So you were aware that supply was here. You should be aware when I teach you what supply is. That means bears can come in at any moment and pull the market back. That's exactly what happened. The next important thing that happened here on the weekly is that the candle itself closed within the body of the previous week. That is now an inside candle. Inside and down would lead us down further. Inside and up means we're going to try and attempt to get up there to the all-time highs. Again, these are the levels, the bull channel for this rally that I have on here. I am identifying the rally from September to the high of December. You see we pull back to the 23 and the 38.2. That's what this blue and green level are. Things are fine for right now. We're above the EMA. Again, guys, things start to look a lot different if we break below the bull channel, but primarily if you break below this cloud, then things are weird, right? But check this out. If we break below the cloud, guess what? You're coming into a big demand zone. And again, I would expect buyers down there, and that's quite some distance away. It's looking about 250 points to the downside. Actually, that's about 300. Sorry. Okay. Let's go to the smaller time frame. This is going to be the daily. And again, we have triggers on here. I teach in the room how to trigger off of these. We don't just like close our eyes and go short or long. But a couple things I want to show you. I identified last week this was a supply zone. You can see price hit supply. We gapped down. We bought the dip, did well to the upside. I had this resistance level on for you. It worked really, really well. And then on Friday, we pulled back. And guess where we pulled back? Right where I'd identified last week, where we had lots of confluence. Now, here's the thing. This is not fresh, okay? So take your trained eye and understand that the confluence was all right here, and it worked for a very nice dip buy, and you guys know that we took advantage of that. So this is not like the first time it's come back there. I always like to say that fresh is best. And this is not a fresh level. So if for some reason we break down below that, then we're breaking below that 50 SMA. And then we have that trendy edge right here, which is around 60.36. This has been a very important level for us, guys. This is like a faster, even though this level for me is the go-to for 2025. Um, I read to you guys my 2025 projection last week, and I said, if we're above this level, we'll go long, but with caution. Okay, with caution. And that's exactly what the hell we're doing. All right, because you can see what's happening. It's starting to get a little volatile and stuff like that. Okay, so the confluence is there, the trendy edge is there. We start to break down below there. You can see here our trigger long worked for the dip buy. I'm going to keep the same levels that I had on here before. This was an imbalance I was talking about a few minutes ago with the ES futures that we took advantage of. Really nice move there, and really I think is the success of why I did well in this January. Okay. Let's go ahead and move on. We're going to move over to the 4 hour. Now, I made this chart for Jerome FOMC that came in last Wednesday. And we're just going to use this for the 4 hour. I want to go over it with you really quick. I said Jerome is halfway happy. And to me, he looked halfway happy. And that's exactly what we got. We got a push up into a supply zone, right? We started to feel a little euphoric. I was there with you. I did so well through the week. I was up thousands, just to give you an idea, just on Friday itself. I was up thousands and actually ended up closing down negative $2,000 for the day. So not a big drop for me. But just to give you some reference, like, that was euphoric. Every day I was making thousands. And then, I get to Friday and I'm like, yeah, this is pretty cool. But, we led with the morning and saying, don't lose your ass on a Friday, right? Well, they kind of waited to the last minute, man, towards 1 o'clock, and then boom, flushed it. And at that time, looking back, I think one of my biggest annoyances, I think, is I was literally pricing out the put right 2 minutes probably before this happened because we were in the supply zone. And then when we got the sudden drop, I'm like, well, I don't think it's going to keep dropping, so I'm not going to buy a put on the lows. And well, guess what? It just kept going down. Now, one thing that I did do is I bought a SPX butterfly for a gap up on Monday. And looking at the sentiment, I wouldn't think we're getting a gap up, but you never know what's going to pan out by the end of tomorrow. So, good luck to everybody. But we ended in the area that I called a normal dip. But just like fresh is best, look, this dip, this area that I gave you guys worked really, really well. And it's not fresh. So if it breaks down, again, we could come all the way back into this area. And notice what it said last week: Jerome scares the market. So maybe, maybe tariffs, Jerome, all this stuff is kind of like what's really going to happen. And you guys can see we have a little bit of imbalance down there. Okay. My overall sentiment for the ES futures this week is you guys can see here. So my banners, green, yellow, and red. Basically, what I'm going to say is I am absolutely neutral and open to the idea anything can happen and will happen, and I would expect some volatility coming to your market. Let's go into the NASDAQ futures. We're going to come down here to NQH25. Same thing, we're going to go to the weekly, kind of go over what I'm seeing here. Same thing, guys. You can see there is a red, yellow, and green, which means I'm super neutral. But overall, technically speaking, we really have not been doing much. This reminds me of last year as well. We stayed kind of in a range for a long time, and it was really frustrating. But it's just a choppy range, and each one of these represents 1 week. You guys can see we came up, hit a high back in December, but we have not done much that whole time. So, a couple things I want to tell you, and I'm going to tell you two different ways. So, instead of just talking about the bearish side, the bullish side, when this does decide to break out, the thing that annoys me is when people are like, but why? Why is it doing this? And I'm like, look, man, it's been sitting in a channel for months. So don't think that when it does break out that we can't keep pushing higher. But on the bearish side, what I'll tell you is that we're holding the bull channel. And if we break down, this is where right when it gets underneath the daily, if it were to break below this, the weekly 9 EMA cloud, that it's coming into an area where we could definitely see buyers. All right. So it's kind of tricky. It really is. You're going to have to be really good on your precision of getting long and or short. Um, my biggest 2 cents to you: use the levels, right? Stop speculating, wait for price to hit a level. You know what your levels are supposed to do, know what your risk is, and boom, execute the trade. Over here on the daily, this is the same one we had last week. I can't make this stuff up. It came into a supply zone. This is what we would expect. Yes, it felt a little euphoric on Friday, but then turned around and kind of dumped on everybody. Overall, though, all that happened was the information was released in a supply zone. That's your edge with supply and demand. We already expect this. We don't know what news catalyst is coming, but you can expect something is going to hit the market. That's what I love about it. You can already read it before it happens. You don't need news. News is just the catalyst, okay? So you're expecting this. I was taking off some leap trades. I was raising cash. And then boom, the news comes out and we stall right here at the 50 SMA. We got that big top and wick. We filled a gap up here. All looks very normal to me. It really does. Now down here is that imbalance from the election. Please note, if for some reason we dump down in here, this is where I'd be looking for buyers to show up, at least on a relief bounce. Okay. Moving over, this is going to be your 4 hour. We have the demand zone down here, which I believe was tested. Supply never was tested here, which I was really looking for that move up here. This is wild. Most of the time, and I said this last week, I'm expecting the NASDAQ to come up here and hit this before it gets you a really big dump. And if you think about it, 18 points down, and I know we were up quite a bit on Friday, but it's not that big of a deal. You can also see a bunch of higher lows here. We got a little channel forming. This is the demand zone where I'd expect a relief bounce, 21.3 by 20,800. I understand it's wide, but we use a certain process to get long in these things. You don't have to just get long because it's a green box. We look for smaller time frame signals, okay? So anyways, that's our blueprint for this week. And then we're going to go ahead and move into Bitcoin. Now, I have crypto. I have a crypto account. I use a Robinhood. And I have to be honest with you guys, they are getting their butts handed to them. This entire weekend, I swear to you, every 2 minutes, I'm getting an update from Robinhood that's like Bitcoin is down, Doge is down, Ethereum's down, Trump is down, XRP is down, everything is dumping, man. Bitcoin right now on Robinhood's at 97,000. Let's talk about it really quick. All right, under here, risk off, no longer an inside and up. So my overall sentiment has been let's stay long as this formation is intact. Right now, it's saying that price is at 97,000. So we are actually underneath the 98.73. So this is no longer an inside and up formation. This comes into play. So we're watching, I'll be watching very closely the 9 EMA in this green zone here where I'll plan. I do not plan to add as of right now. I could, but I think I'm going to hold off just in case we get a little bit deeper of a pullback here. All right. So, anyways, let's go ahead and move on from Bitcoin. Again, those are the major levels that I have. I think overall, though, we can end up here in 2025. So, again, very bullish on buying dips, deep dips. Okay. So, it's been fun this year, but at the same time, what have I been preaching to you every year, year after year? And I know I've been telling you this every freaking week. Februaries have this thing. January's I've always done really well, and then February towards March, they take everything back. So be careful. All right. I'm not saying it's going to continue this way, but damn, welcome to February the 3rd tomorrow or the 2nd tonight when the future's open. Because if we dump down, it's like, damn, right? All that hard work. Don't let it go to zero. Keep your chin up, and we'll keep playing the part. All right. So there's Bitcoin, and then I want to take you into the VIX. Why the VIX? Well, it's important. I use supply and demand on this as well. The levels that we could see going into this week are going to be 21, 24, and 26. As long as price is staying above this blue level right here, above 16.99, you obviously need to be super cautious and understand that volatility is coming in the market. If you're not a trader that can trade from an 80 to 100 mile an hour stock market, you might want to get out of the way. All right. If you're a trader that likes a little bit more predictability, a little bit more slow action, this week may not be the week for you. Couple things I want to end this broad market analysis on. Some things that I learned over the years. If you want to stay in the game and you choose to trade during these conditions, smaller allocations with wider risk are great because you can't put your normal stops on stuff like this. You'll get stopped out really quick. So I prefer to either trade smaller, okay, or I trade with a debit that if it goes to zero, it's not going to kill me. Okay, so I'll get into the market. Let's say that I buy a $2,000 position on the regular and I don't want to lose more than $500 of that $2,000 position. I would much rather just buy a $500 position and let it go to zero if that's what happens. Either way, it doesn't matter. I'm already open to the idea of losing 500. This way I don't get chopped up and get scared out of my positions. Okay. The next thing is, I don't tell people to sit on their hands. We like to execute volatile markets, but, there's nothing wrong with not trading if it's not your thing. All right. If anything, just sit back, watch, learn, educate yourself, and have an amazing week. I can't wait to trade with you guys in the morning. Hope to see you bright and early. Let's have an amazing week. See you later.